Here's the first take on the index this morning. It's a flat with a bit of a positive bias.
It's a quiet start so far, but things appear to be picking up.
As far as the markets are concerned, continues. There is a recovery which is underway.
So the range has been fairly tight, right? On the Nifty, it's been close to about 80, 90 points. On the banking index, the Nifty banking index, it's been a range of close to about 260 points.
We do have to get down to the close of what's been a really quiet session. Not much moving on the index.
Hello and welcome to Markets Today. I'm Sonal Bhutra and here are the headlines that we are tracking for you for the day. Stock markets end flat after a day of subdued trade. Financial and banking stocks continued to bleed. The action in most other sectors remained stock-specific in the absence of any big triggers. The hot realty market in the National Capital Region has now drawn Oberoi Realty. After several others like Godrej and Prestige, the acquisition of a sizable land parcel in Gurugram marks Oberoi's entry into the market. FTSE and S&P BSE 100 rejig to come into effect from the 18th of December. TVS Motors, IDFC First Bank, Yes Bank, Hindustan Aeronautics to be added. Tata Elxsi, Emphasis, Adani Power, ACC to be removed. Ambit Capital believes that expectations from IT companies for FY25 are aggressive. Zentech gains 5% after securing a new export order worth 42 crore rupees for state-of-the-art defense simulators. Newgen Software up 5% ahead of board meet slated next Monday to consider a likely issue of bonus shares. 27 of 40 applicants have been approved for the PLI scheme on IT hardware, clearing the way for 3,000 crore rupees in investments and creation of 50,000 direct jobs in the sector. And here's the lineup of what we have in store for you. In Market Opinion, we have Sanjeev Prasad, MD and co-head at Kotak Institutional Equities. In Big Corporate Voices, we have Saurabh Gupta, CFO at Dixon Technologies, Umang Vora, MD and Global CEO at Cipla, and Ameera Shah, promoter and MD at Metropolis Healthcare. Moving on to the first headline today, a range-bound session saw the Lal Street end the day flat. Nifty and sensex ended close to 0.25% in the red. However, the broader markets outperformed the benchmarks. Midcap index hit a new record high intraday to cross the 42,000 mark. Surbhi Upadhyay is here with the details. Surbhi.
Well, a very quiet start to the week and the indices in a very, very narrow range, but with volatility and some choppiness. The Nifty spent the day in about a 90-point band, but it had that big wave of selling to endure around afternoon, and blame it on the banks and financials once again. That was the hallmark of trade today, that nervousness, that uncertainty that we had on Friday after the big RBI announcement. Perhaps that's not entirely over as yet, looking at today's trading action, because the Bank Nifty had that big intraday fall. Of course, the good news for the bulls is that it got bought into. So the collapse didn't continue endlessly. The Bank Nifty and the Nifty, they closed off the lowest levels of the day, but the weakness is persisting. And that's very evident when you start looking at stocks. Axis Bank, ICICI Bank, most of the big blue chip names on the red side today. Even NBFCs, Bajaj Finance was nursing another, 1.5% lower cut coming through. Poonawalla Finance, Sundaram Finance, these were some of the names on the way down. Other Nifty losers, well, the big boys couldn't quite come in and help matters today. Whether you're looking at consumer names like HUL or ITC, or you're looking at a Reliance, a lot of the auto stocks had some more selling pressure to contend with. They were basically looking at profit taking after the big move on Friday. So M&M, Tata Motors, these were stocks down. IT was trying to provide support. It was trying to bat real hard, but it wasn't quite enough when it came to the Nifty's final tally. You had TCS, LTI, Mindtree, Wipro, all of these stocks putting on gains, but not enough. Nifty gainers also included Bharti Airtel, Divi's and Coal India. A word on the mid-cap market. There also the momentum kind of fizzled out by the time we were in the afternoon session, and the index ended flat. Those stocks had their fair share of moves. No taking away from that. KPIT Tech signed. These stocks are very excited as we get into the Tata Technologies IPO. Then there is, for instance, Mankind Pharma, which is getting added on to the FTSE indices. So there was some traction over there. Quiet session, more about individual stocks. Global cues are still okay. US yields have come off. But I think the market needs some more clarity on the banking and financial side of things before it decides to make the next bigger move.
All right. Thank you, Surbhi, for all those details. Moving on to the market opinion now. Sanjeev Prasad, the MD and co-head of Kotak Institutional Equities, says that it is better to stick with mega caps for now. He also gives his views on the sectors to bet on.
Yeah, ultimately, as a general principle, you have to look at stocks more on a bottom-up basis and figure out whether there is any real value in the stocks based on whatever is the gap between the fair value of the company or the stock and the price. And we're just looking at prices and trying to figure out, that this is a good stock to buy or not buy. And that's a foolish pursuit, which unfortunately many people in the market have been, doing, just looking at stocks and assuming which are going up, and assuming there is value in the stocks. On a portfolio perspective, I think it's better to be the large caps now. The large caps, when I say it's mostly the mega caps, where at least we can see some value in some of them. On the portfolio part, really, we haven't really changed much. On the margin, we have changed a few things here and there. But as I said, honestly, it's further really to find too much of value in the name. So we are sticking with the same stocks, largely the large cap banks, some names in pharma, healthcare services, which I talked about earlier, overweight in consumers, underweight in IT, and Reliance and Telecom are fine. So that's broadly the mix of stocks which we are having. We also have some capital goods stocks and real estate, although I'm just struggling with the way the stocks run up over there.
Okay, that is some market opinion coming in. Moving on to the second headline now. Oberoi Realty surge in trade. The company has made an interesting foray into the gurugram market. This is a market which has been doing well for a while, and the company has spoken about entering there via an acquisition. So they have acquired a land which is around 14.8 acres. The consideration for this is around 597 crore rupees, and the total development potential is 2.6 million square feet. The company says they intend to primarily develop a luxury housing property here, and that is what they will work on as well. And NCR market, the bigger players are largely into the luxury market as well. Now, the transaction has been under discussion for quite some time. In fact, in their Q2 earnings as well, the company did indicate that yes, they are looking at land buys, be it Mumbai, be it NCR as well. And they are looking at land buys wherever there is demand. And looks like NCR market has come back strongly after the impact of COVID. And the growth in units sold and realizations has been very, very high there. And that is something which must have attracted Oberoi Realty as well. So we have the likes of Godrej Properties. There is DLF. There's Prestige as well in this market, and now a big player which has mostly been in the Mumbai market is making an entry into the NCR market. So things definitely heating up for that particular geography. So that is something that the stock reacted on. It was high by 5% at a point in time, but came off from those highs as well. Moving on to the third headline now. The FTSE and S&P BSE 100 rejig will come into effect from the 18th of December. Mankind Pharma surged after the company got added to the FTSE All World and All Cap indices. Vivek is here to tell us the stocks that will be in focus on the back of this inclusion. Vivek.
So this particular index review, as far as the FTSE indices was concerned, was mainly restricted to the new IPOs, stocks that have listed recently, and if there are any stocks or any companies that have emerged out of either M&A activity or demergers or spin-offs. So along expected lines, Mankind Pharma in the recent listing that's done quite well. This particular stock has been included by the FTSE in both the All World as well as the all cap indices. Now, as per IIFL Alternative Research, this particular stock can see inflows of close to $30 million on account of this particular inclusion into the FTSE indices. Now, the other index that we are tracking today is the BSE 100 index, the S&P BSE 100 index. Now, remember, there aren't too many funds that track this particular index, so the flows may not be very material, but this particular index itself is actually used as a benchmark by many fund managers to assess the performance. On the back of that, the inclusions and exclusions into this particular index becomes quite important. So which are the stocks that are going to be added over here? TVS Motors, Hindustan Aeronautics, PFC, Yes Bank, APL Apollo Tubes, Persistent Systems and IDFC First Banks are the stocks that enter this index. On the other hand, the stocks that come out are Tata Elxsi, Adani Power, Voltas, Bandhan Bank, Emphasis, Crompton Greaves, Consumer Electrical as well as ACC are the ones that make way for the new entrants.
Vivek, thank you so much for joining us with all those details. So those stocks on our radar. Well, with that, we'll slip into a short break. As we do that, we'll leave you with some more market opinion from Sanjeev Prasad, and we'll be back with the other headlines in just a bit.
If you look at the consumption-related sectors, whether staples, discretionary durables, etc., what we are seeing is a big change in the operating environment of these sectors, in the sense that, the traditional strengths which this company had, whether it was control or distribution, and distribution ultimately in India was largely through the general trade channel, whether it was, very popular brands, etc. What we are seeing is a change across all the traditional strengths of consumer companies. So, number two, distribution modes are no longer that, valuable as they were earlier, because you are seeing a big change in the distribution mode itself. So if you put all this in the context, there is a lot of disruption coming. If you look at the real estate market in India, that was pretty much dead between 2012 all the way till 2021, between 15 and 21 prices, most of the markets didn't go anywhere. When you look at the NCR market, Innova market, Pune, Bangalore, except for Hyderabad, prices have been pretty flat, which means that in real term, prices are actually down, if it up significantly. So the number one factor that, there is a lot of pent-up demand. Number two, affordability is great at this point in time. And number three, prices just started to move up. Over the last 12 months, 18 months, we are starting to see some price movements in some of the markets. And that is probably the trigger for some of the households which have been sitting on hands, waiting for, price to move up to start looking at real estate more favorably.
Welcome back. You're still tuned into Markets Today, a show where we wrap all the market action for the day. And if you've just tuned in, let me tell you how the day went really today for the markets. Nifty was quite range-bound today. It was trading in a 90-point range today, but ended in the red, down around 40 points, but quite choppy, so to say, in the trade today. The mid-cap side of things, well, the mid-cap index crossed that 42,000 mark to hit a record high, but closed from those levels. It came off and closed at 41,856. It was high by around 45 points. So that's what happened on the mid-cap side of things. It was largely a stock-specific day. And if we talk about the Bank Nifty, so majority of pressure on the Nifty in the later part of the day actually came in from Bank Nifty, but that dip was bought into, and Bank Nifty closed absolutely flat with some positive bias. But of course, the RBI's decision that came out on Friday is something that continues to pressurize some of these banks. So that is something that we are tracking closely. The PSU banking index, though, did really well today, and there was some possible pressure coming in for some of these names as well in the consumption side. The IT sector, though, did well in trade today. So that's what happened in the markets today. But we've been talking about how stock-specific the market has been today. So let's go to the fourth headline now and talk about different stocks that are on our radar. Let's start with the first one. Brokerage firm Ambit Capital in a recent note stated that ask rates for IT companies to meet consensus growth expectations in second half or FY25 are too aggressive. Reema Tendulkar takes us through the key highlights. Reema.
Thanks so much for that. So basically, what does an ask rate mean? Now, the street has certain expectations in terms of a growth rate that IT companies will achieve in FY25. It could be a 7% growth, 8%, 9% growth. So what do the companies need to deliver on a quarterly basis? So say a 2% growth in Q1, 2% growth in Q2. So that's the ask rate, CQGR, a compounded quarterly growth rate. So that, according to Ambit, is still on the higher side. And remember, earnings estimates for IT companies have been brought down post the Q2 miss. But still, according to Ambit, consensus expectations are too high. What the companies need to deliver on a quarterly basis for top-tier IT companies like TCS is at 2.9%, Infy is at 3.3%, Wipro is at 1.8%, Tech Mahindra is at 2.6%. That, according to Ambit, is the highest that we've seen in the last 6 years, X of the COVID year 2022, which got boosted due to pent-up demand. For HCL Tech, Ambit says the ask rate, which means how much the company needs to deliver to achieve its consensus expectations for FY25, appears to be reasonable because the company needs to do about a 1.9% growth every quarter in FY25. Now, for mid-cap IT companies, or Tier 2 as they call it, they're saying the ask rate is 2.7 to 3.9%, and this is in line or above the 5-year average. Expectations for LTI, Mindtree, Coforge and Persistent are at the higher end of this range, and they appear most at risk. Also, Ambit goes on to talk about the valuation. Valuations for large caps are at a 36% premium, and mid caps are at a 100% premium to their pre-COVID average valuation multiple. So they're saying that even after the misses that we've had on the earnings front for 3 consecutive quarters now, Q4, Q1 and Q2 of FY24, valuations are still on the higher side, and consensus expectations still appear to be a bit aggressive by the street. Back to you.
Okay, all right, Reema, thank you so much for those details. But stay with us. Newgen Software surged 5%. The company has announced it will consider issue of bonus shares. Tell us more about this. When will the meeting be held?
Well, the news in Newgen is pretty simple, right? There is a board meeting next week on 27, where the board will deliberate upon a bonus. This will be the company's first bonus, maiden bonus announcement. Up until now, in its history, we haven't noticed any bonus or a split announcement. The stock is down well, 280% on a year-to-date basis. Sorry, 280% in the last 12 months. It's trading at a fresh 52-week high. And separately, we're talking about the technical trigger about a bonus announcement. Fundamentally, the stock is done well. If you remember, IT companies have been reporting weak numbers. But here is Newgen, which has reported two very strong numbers, 2 quarters in Q1 and Q2. In Q2, its quarter-on-quarter revenue growth was about 16%. Year-on-year revenue growth was about 30%. In the first half of the year, the company clocked in a revenue growth of more than about 30%. And in the conference call, they went on to say that Q3 and Q4 are also going to be fairly healthy based on the pipeline, the visibility that they have. So fundamentals have been good for Newgen up until now. And now you've got that added excitement surrounding an impending bonus announcement by the company on the 27th. Back to you.
Reema, thank you so much for joining us with all those details. Moving on to the next stock on our radar, Cipla's Indore facility has received a warning letter from the US FDA. The warning letter summarizes controls and methods at the facility that violate current good manufacturing practices. Umang Vora of Cipla spoke to Ekta Batra earlier this month. He said that the Goa plant would be ready for re-audit by December. Also added that the Indore unit could be re-audited in July or August next year. Listen in.
Both of them are at different time points, right? Not the most ideal situation to be in at a point that we are. But let's say in Goa, we are about a year, about 14, 16 months from our last audit, right? Usually the FDA comes back within 20 to 24 months to come back and audit. I do expect that we would possibly be re-audited in Goa in the next 6 months. I'd like to believe that by December, we'd be ready for that, right? If not already. Indore is slightly longer because their last inspection was in February. And I think if we can possibly get re-audited by next year, possibly July, August, that'll be great. But the remediation in Indore will also be over around the July time period.
All right, that's the word coming in from Cipla's management. Moving on now, Metropolis management in their Q2 conference call said that discounting from new age players has reduced and company is witnessing a reduced traction in metros. However, they are optimistic on the western region. Amira Shah, promoter and MD at Metropolis Healthcare, told CNBC-TV18 that the company is looking forward to a better second half compared to the first half. Listen in.
I think overall as an organization, we grew at about non-COVID, which was the core business, keeping aside any COVID and government contracts, grew at about 13% Q2, which was mostly led by volume, about 10%, and about 3% was led by a revenue per patient increase. Actually, the Western region grew much faster for us than 13%, which are actually our core markets. We have seen that at least for Metropolis, we have gone on to go back to pre-COVID growth levels. And margins are also very similar, just adjusting for the additional expansion that we are doing, which we were not doing pre-COVID in terms of lab expansion. So I think we are pretty much back to pre-COVID levels from a growth perspective. And H1 for us is usually a little bit slower growth. H2 tends to be a little bit better. While Q3 is obviously not the best quarter, it's probably the lowest quarter of the year, but Q4 tends to be the best quarter in the year. So look forward to a better H2 as we go forward, even better. But I think we are feeling very positive about the years ahead.
Okay, that's the one word coming in from Metropolis. Moving on now, SBI Card rallied 1.5% after RBI announced new norms for unsecured loans last week. The company says move will reduce the capital adequacy ratio by 4%. Abhishek Kothari joins in with details. Abhishek.
Well, SBI Card gave a press release wherein they mentioned that the capital adequacy ratio on account of RBI norms will be impacted by 4% of 400 basis points. Remember that in Q2 FY24, their CRAR, that is capital adequacy ratio, was at 23.3%. So if required, they say that they'll raise money via Tier 2 capital and there is no need for them to go via equity or raise funds via equity. So the increase in risk weights may lead to an increase in borrowing costs, but that is for the industry as a whole. SBI Card Card is a AAA minus rated entity, and they have enough sources and diversified lender base to manage the risk, if any. They also say that the new rules will give them opportunity to onboard good quality customers. We have a brokerage note on SBI Card. Morgan Stanley has written they have an overweight rating and a target price of 950 per share. They said that the impact of RBI measures on Tier 1 ratio will not constrain the business momentum for the lender going ahead, and they see lower risk of having to slow down unsecured credit growth more sharply than others or peers. Back to you.
Okay, all right. Let's get you some more stock-specific news. Zen Technologies zoomed today after the company secured an export order worth 42 crore rupees for state-of-the-art defense simulators. Upasana Bhatt is joining us now with more details as to what this means for the company.
Well, the company has secured new export order worth rupees 42 crores, comprising of defense simulator, and the execution timeline is about 18 months. The current order book stands at 1,500 crores, with exports contributing more than 400 crores. Earlier, we had an interaction with the management, and they have retained their FY24 revenue guidance of 450 crores, and mind you that the revenue for H1 FY24 stands at around 198 crores. For FY25, they are guiding a revenue of almost 900 crores, and EBITDA margins likely to stand around 35% is what they have indicated. They are also expecting an incremental orders worth 400 to 500 crores in FY24. So all in all, the stock remains in focus today on the back of the order win.
Okay. All right, that's the update on Zen Technologies. But actually, we spoke to the management earlier today, so let's hear out what they had to say.
Updated order book position is about 1,500 crores, and with respect to the execution timeline, we have about 18 months, and this will be executed in the next 18 months. So these are two things, and this is for simulators that we are. So we differentiate very largely between simulators and non-simulator like anti-drone systems. So this is a simulator order that we have got. In terms of exports and domestic, about 400 plus crores is exports, and domestic is about 1,000 crores. Yeah. We expect EBITDA to be maintained around 35%, and we expect that to continue into the next couple of years also. That's the minimum target that we have set internally, a very conservative target. We do hope that we'll do better than that. I would say about, for this year, another 400 to 500 crores worth of orders. The pipeline is there, and we think that we have a good chance of winning most of them. Yeah.
Okay, all right, let's move on to the fifth headline now. Foxconn, Dell, HP, Dixon and Lenovo are among the 27 companies that have been approved for the IT hardware PLI scheme. IT Minister Ashwini Vaishnav said that out of the 27 companies, 23 will be ready to start production on the first day, while the rest will begin within 90 days. The minister also said that the scheme will lead to additional production of 3.5 lakh crore rupees and will generate direct employment for 50,000 people. Speaking to CNBC-TV18, Dixon CFO Saurabh Gupta has said that the company is confident of meeting requirements of India's market.
I think this is the kind of support that we were looking for. And over a period of time, we feel confident that, one, we'll be able to meet the requirements of the large domestic Indian market, which is presently being serviced through imports. But over a period of 2-3 years, I think so India can potentially become a hub for global markets as well. If you look at every industry requires a particular scale and size, and then the component ecosystem evolves. It has happened in electronic sector, it happened in the automotive sector, where India has become a manufacturing hub and an export hub. I think the similar thing is now happening in the electronic sector, led by mobiles, and now hopefully IT hardware as such. We think all the companies put together, 27 companies, including us, I think so the value addition over the next 3 to 4 years can eventually go to 40-45%, if not more.
Okay, all right, that's the word coming in from Dixon Technologies. So that stock is on our radar. But with that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates on CNBC TV 18.